Hey guys, welcome back to Toto Capital. My name is Liam, and in this video I'm going to share with you an extremely profitable smart money concept strategy. This strategy has allowed me to pass many funding challenges and to acquire a large amount of funding capital. What I've done is essentially simplified the frameworks of smart money concepts involving liquidity, involving order blocks, and involving fair value gaps. What I've done is created a framework that is a step-by-step process that you can personally follow and execute within the markets. So without any further ado, let's jump over to the charts so I can show you this extremely profitable smart money concept strategy. So now that we've headed over to the charts, this is USD CHF on the 4-hour time frame. What I want you guys first off to do is to head over to the indicators tab at the top of your screen, type in fractals, okay? It's this one by Rachel_T. Add that to your charts, add that to your favorites, okay? Next, I want you to add a simple, so it's a exponential moving average, okay? So if you just type in EMA, add that to your chart, and you want to add the 50 exponential moving average, okay? Essentially, the 50 EMA gives us a directional bias, okay? So that's just a extra confluence that we can use when executing within the markets. So now let's head over to the chart and let's have a look at exactly how we can trade this quantifiable, profitable, smart money strategy. Okay, so what you can see here is we've had a very strong sell-off to the downside, okay? What we've done is we've essentially broke structure to the downside. So that's indicated by this black line here. You can see we've closed below, we've got a body close below. That indicates to us that sellers are in control of this market, okay? So whether you choose this low here or you choose this low over here, regardless, you've broke structure to the downside. So now that we've identified that we've broke structure, what we can do is simply drag our Fibonacci tool from the swing high down to the swing low. Okay, so what we can see is our 50 exponential moving average is not only sloping to the downside, we are also below the 50 moving average. Okay, we're below the 50 exponential moving average. We've broke structure to the downside, and we've also created a fair value gap. Okay, so essentially within this region here, we've created a fair value gap to the downside, essentially indicating that price has moved very, very impulsively to the downside. So now that we've identified that we're sell buyers on the market, swing, our Fibonacci goes from swing high to swing low, and then we want to see price retrace back to our 68% retracement. Okay, the reason why we use the 68% is because that allows us to have a quantifiable 1 to 2 risk to reward down to the low. Okay, so you can see if we're tagged in the trade here, we've got just over 1 to 2 down to the low. That enables us to have an extremely repeatable and extremely objective rule-based strategy. Okay, because ultimately what we could do and what I used to do is we can take like an order block. Okay, so the order block would be this last up candle here before we had this sell off to the downside. Okay, so in theory we could mark on order blocks and execute based off of that. But what I found is we can just take a fixed retracement of this move and execute that way, because that's a very much more repeatable way of executing, because sometimes the order block is going to be down here, sometimes the order block is going to be up here. Ultimately, we don't know where that's going to be, so it's not very quantifiable to execute based on our risk to rewards. So what this allows us to do, we've got a fixed risk to reward, allow that trade to be triggered in. You can see we are triggered in right here, okay, and we're looking to target the range lows. Okay, we've got invalidation at the swing high, and we've got a clear target mapped out at the swing low. Okay, so price is just playing on here, and ultimately, you can see that a 1 to 2 risk to reward was hit on this trade. Okay, so this is how you use the break of structure in confluence to your EMAs, which is the 50 EMA. You have a quantifiable risk parameter here, quantifiable target, and you're triggered at a 0.68 retracement of that move to the downside. Okay, sometimes you're going to be triggered in, sometimes you're going to miss the move. That is just part of the market. Okay, but we need to ensure that we're getting in on the retracement, we're getting in on the discount, and then we can look to, ride that trend lower. Okay, so that's a sell example. Now let's head over to a buy example. Okay, so now let's look at a long trade example. This is on gold XAU USD on the 15-minute time frame. So this is my day trading strategy. And one thing really that I want to highlight here is, this strategy can be used across all time frames, because at the end of the day, the markets are fractal and they behave the same across all time frames. So, if your confluences do line up, you're welcome to execute across all time frames, all asset classes. However, just make sure that you do your back testing and you ensure that you do have an edge within the markets. So this is gold on the 15-minute. What you can see here is we've had a break of structure to the upside. We broke this structure here above this fractal high with a body close. Okay, we've body closed above. And what you can see is we have the most recent fractal low here. So now that we've seen a impulsive move to the upside, also in confluence to our 50 exponential moving average, you can see the exponential moving average is sloping to the upside, indicating that the buyers are in control, indicating that, over the last 50 periods, over the last 50 candles, the buyers are in control. Okay, so the momentum is clearly heading to the upside. Indicated ultimately, price action is the ultimate driver of this, and that's why that is the most important thing. So we've seen this impulsive move to the upside. What we can do is draw on our Fibonacci from swing low to swing high, and we're looking for price to come back into our retracement area. So we've got a limit order set on that area there. Stop loss goes at the swing low here, target up to range highs. Okay, around a 1 to 2 risk to reward. You can see we're triggered in the trade right here, and ultimately a 1 to 2 was hit before reversing on some news. Okay, so this was actually a live trade that I took today on gold on the 15-minute time frame during the New York session, okay, during the volatile session. So this is a long example. We've got a clear break to the upside, retrace to our retracement area at 68%, stop loss, clear and validation, bit of room to breathe, and then clear target up at the range highs. And you can see that is what was hit during the New York session. Okay, it's very important to take profits up at these fractal highs because, prime example here, we're not looking for crazy risk to rewards. We're just looking to get in and out of the market, very quantifiable, and then look to move on to the next trade. Okay, so this is gold and a very great buy example. You can see there was some drawdown within the markets, but it is normal. Not all trades are going to sort of just ping your Fibonacci retracement and then just head straight up to target. Okay, it's important to note that you're going to suffer some drawdown on these trades, but ensure that you've got a very quantifiable exit if price does push down and essentially puncture through the low there. Okay, so this is a great buy example which was in the markets today. Hey guys, thanks for watching this video. Hopefully it's been very insightful on smart money concept strategies in a simplified format. As always, ensure that you are forward testing, back testing, and collecting a large amount of data before deploying any capital within the live markets. Okay, I hope you enjoyed this one, and I'll see you in the next video. Take care, guys. Bye-bye.